So guys, just before we get into it, a bit of a quick one. Why should you listen to me? So I've been trading now over 11 years. I think I'm one of the very, very few genuine traders in this industry. Plus, I call every single trade live that I take. Every single one. So it's for full transparency, full authenticity. And so people can see what proper trading looks like. So yeah, I just always think, what else can I do to continue proving that full transparency, that trustworthiness? And so I said, right, let's call every single trade live. And I've now been doing that online for the last 9-10 months. And so the results speak for themselves. So without further ado, let's get into it. So gold, what we're going to do, we are just going to go into a random bit of data. Okay, so you can see exactly where we start from. So let me just randomly click and we'll see where we stop. Let's go for 22nd of June, something like that. And we're going to drop to the monthly. Cool. So let's just lower that. So guys, what I'm looking for to begin with, before we even get onto the charts, okay, this is obviously the monthly that you can see. So to begin with, I am looking for what is silver doing as well, okay? There's a really good bit of positive correlation between silver and gold. It's not 100% positive, of course, but a lot of the time they typically move in the same direction. Now, when you look at timeframes like the daily, the weekly, the 4-hour, things like that, yes, the price action will look different, but the overall bias between the two on the higher timeframes at least tend to move quite nicely. Not always at the same time. Silver tends to move a little bit earlier than gold the majority of the time, but a lot of the time there's quite a healthy correlation, which is always lovely to check in on, okay? The second thing would be the DXY. Yes, people will argue, well, gold is a commodity. The DXY, is obviously indicating US dollar strength or weakness, market sentiment. But again, the inverse correlation is quite good. There's times where obviously gold will be pumping and so will the DXY, and people go, well, that doesn't make sense, that they're meant to be inversely correlated. But I say that, there's plenty of times, even in 2024, that was the case where we saw both the DXY and gold bullish. But that's normal. But it's still a good confidence to have in your arsenal, and it's still a good thing to check, because again, a lot of the time when the DXY is experiencing a lot of strength, a lot of bullishness on the higher time frames, so the daily, the weekly and monthly, we will typically see gold typically sell off, okay? But not all the time. But again, in confluence with silver, in confluence then what gold itself is telling us, we can already start to formulate a very good macro bias before we even look and jump onto the actual timeframes in terms of determining areas of interest, okay? So make sure you're really getting those two dialed in, okay? Again, we've got to look at the geopolitical side of things, what's going on around the world. Obviously, is there a lot of uncertainty with US dollar markets, US dollar currency in general. Obviously, when uncertainty is around, typically gold and silver commodities will rise, okay? Because they are treated and seen as a safe haven. So yeah, gold is always quite lovely to trade. You've just got to make sure you're on the right side of it. And too many people use gold and treat gold as their rags to riches story, thinking they're going to turn $1,000 into multi 6 and 7 figures, and it just doesn't work like that, unfortunately. So yeah, let's get stuck into it now. We've sort of laid the foundations of what we're looking for before we even get onto the charts. So monthly time frame, as we can currently see at this point in data, I will just say to a lot of traders, all of this here, this price action down here, is completely irrelevant, completely, okay? All we want to be interested in, or this is for my strategy at least, all we want to be interested in is the most recent leg. So if we are bearish, we want to be the most recent bearish leg we're interested in. If we're bullish, we want it to be the most recent bullish leg we're interested in. So as we can see on here, we are bullish. This is our most recent higher low, okay? So I'm just going to mark this out as our most recent bullish RSP here. Basically, as long as we stay above there in terms of structure, it's basically a structure point, the most recent swing points. As long as we stay above that, we are bullish, okay? And we can still see, so from the higher low to the higher high, and we're currently in a state of a pullback on the monthly. But that's all I sort of give attention-wise to the monthly, just so I know where we are within that, okay? So we're bullish on the monthly so far. Comes to the weekly again, so we're just marking out we were bullish at this point. We've pulled back into a higher low. We've then failed to put in a new higher high. Doesn't mean we're bearish at this point, but once we break below here, the most recent bullish RSP on the weekly, which this candle did, we have turned bearish. Okay, so we're bearish on the weekly. This is our most recent bearish leg here, and at the moment this just looks like a typical higher low that's being created, and this weekly candle was currently engulfed the week before, so this looks like this might be our lower high formed now, and we might see potential downside, so we just got to be aware of that. Okay, we go on to the daily. And again, the daily, we're not interested in any of this crap up here, okay? People might come at me in the comments saying, but what about all that support, or all that resistance, or all that supply and demand zones from all the way back here? And I say, I do not care for it. The reason I do not care for it, because a lot of the time support and resistance is completely subjective. A lot of the time as well, if you've been around long enough like I have, okay, and you might not hear this a lot, but if you've been around long enough like I have, if price is coming up to a high level of support, a high level of resistance, yes, it might react from it, but typically it's just a rest phase, okay? And then price continues on in its intended direction anyway. So let's say we're bearish, and we're coming, let's say we're bearish, as you can see here, we're coming down to a huge level, say, of support, say here. Lots of people looking to buy here, but you're going against the trend, especially, and the higher time frame trend as well. Yes, it may have a rest phase. Yes, it may have a pullback, but price will typically then continue dumping in the direction that it was, okay? So be aware of those regions, because you'll get rest phases and potential reactions from them, but you have to trade with the trend, and you have to know where you are within daily, weekly, and monthly structure typically, okay? So back to it, just a little caveat. So the daily, okay, we were bullish at this point, okay? We were bullish again. We put in a new subtle higher high compared to that previous high, and this candle then turned us bearish and broke that bullish RSP here, that higher low region. So currently we've pulled back into a lower high region, okay, and we look like now we're within market structure, but obviously we've not put in a new higher high. We'll put in a lower high within this bearish leg, so we are bearish on the daily still, okay? Now, before I even look onto the 4 hour, let's remind ourselves, on the daily, we are bearish. On the weekly, we are bearish. On the monthly, we are still technically bullish, okay? Now, in an ideal world, I would want the monthly, weekly, and daily all in sync. But for more of my swing/day trading strategy, if the 4 hour, daily, and weekly are in sync, then that is an optimal trade, okay? So we're aware of the monthly, but as you can imagine on the monthly, obviously every candle is a month's worth of data and price. So obviously if the monthly is going to break trend and break that bullish RSP that we were talking about at the start of the video, we're not going to know until the end of the month with the body close of the candle. So I'm aware of the monthly, but if the 4 hour and the daily are in sync, then that is my bias. So typically, as we know, weekly, bearish, daily, bearish, and we'll check the 4 hour now, but I imagine it's bearish, and yes it is. Okay, so 4 hours now swinging lower and lower. So at this point in time, if we just go back onto the daily, in regards to this bearish leg, the lower highs are already formed. And if we're looking for further shorts, this would have been our most probable area of interest, okay? Because it's the lower high, we don't want to be shorting from the lower low, but we want to be shorting from the lower high, so we get the better risk to reward, naturally so, okay? Let me just pop that on to illustrate that. We want to be looking for shorts from the most recent lower high, okay? And so on, just illustrating that. We don't want to be shorting down here because the risk to reward would be pants. We would need to cover structure as well to allow for price to breathe, because we're bearish, and like you said, price is more than likely to pull up here, and that's okay, that's normal, that's good, and that's more of an optimal risk to reward. So at the moment, if this was live and we were looking at this, we were thinking, right, the market's agreed with our bias, we're bearish, this is the lower high, okay, but obviously we're within a little bit of a range at the moment. So we pop down to the 4 hour, we see where we are within 4 hour structure, okay, so we have lower high, lower low, lower high, lower low, okay, and we've come into this wicking area before then sticking another lower low, okay. So what we could do here, if we just use a fib, we can see from that most recent lower high to lower low, We have respected its body closes that we're interested in. We have respected a pullback, and now we put in a new lower low because we tapped into one of the fib extension targets. Okay, so we could then look at, basically it's got to go wick to wick for the fib. So we could then look seeing if is price, because if price pulls back from here, then we would be interested in a short. I'm not interested in shorting here. The risk reward's not good enough. If price keeps coming lower, I just need to keep adjusting my fib until the 4-hour leg has finished. So for example, let's just see how things play candle by candle. Okay, so as you can see, the 4-hour leg hasn't finished yet. Okay, and as you can see, we've then had a huge change of structure, a break of structure. So this is why, again, as I said 40 seconds ago, we wouldn't want to be shorting from there because it's not at the lower high region. It was near the lower low. So we had to be patient and sit on our hands, wait for price to finish. Then, as I've just done, adjust that 4-hour fib, okay? And then obviously we'll be looking for lower high entries. Now the 4 hours obviously not given any opportunity, so you'd still be sitting on your hands at this point, okay? So, and as we've now seen on the 4-hour, we can delete this fib because it's been completely invalidated. You know, structure's been invalidated. Okay, that's the main thing. Now, if we just see where we're at on a daily perspective, don't get caught out. Remember, we are still bearish on the daily and we will be on the weekly. So on the 4-hour, yes, we've broken higher. So again, yes, we want to be sitting on our hands. We don't want to be obviously shorting from here. There's a huge amount of momentum, a huge amount of volume. So again, we just need to be patient. We need to be sat on our hands and waiting and waiting and waiting, okay, until we get into a better area of interest. Right, so at this point here, we have turned bearish again. Okay, let me explain. This has turned us bullish. We've broken that prior bearish structure. We pulled lower. This is a pullback, a bullish pullback. Still a pullback at this point with this wick, okay? It's only after we break and take out that lower low again that we've now officially turned bearish, okay? So what does that now mean? It now means I'm a lot more interested, okay, in taking shorts, okay? And obviously the daily's putting a lovely another leg to the, well, not a lower low, but it's putting a healthy leg pushing lower. So we're now interested in positions because the 4 hours turned bearish again. So again, we've got to wait for the leg to stop, or if it comes into here for a lower high region, then we'll be interested, okay? So again, we've got to be patient. We've got to sit on our hands. Too many gold traders are trading it on the lower time frames, and unfortunately, it's just super, super choppy and messy, okay? So at the moment, looks like we're forming a bit of a base. So we are now in a position. This is our 4-hour leg, because this is the leg, this is the one big leg, because that's what turned us bearish, okay? So we have to fib that one whole leg, okay? Now, as you can see, we have popped up into an area of interest where that lower high region forms. We've got the 4-hour EMA, we've got the fib levels. Little tip for you all, gold on the daily and the 4-hour, if you're fibbing correctly, loves tapping into the 50% and the 61.8 region. It's an absolute, not all of the time, it will sometimes push higher naturally, or sometimes it will fall short of it. But a lot of the time, from the data I've done over the last 11 years, it loves this area, okay? And this area is a much more probable area of interest because, again, if I just move this down, again, if we were to then look, obviously any shorts, we're looking for lower high positions. So if we were looking to see a reaction from there, say on the 1 hour, and looking for our entry criteria, we have to cover the 786, okay? Because price could happily come up to there and it would still be bearish, okay? So once a 786 has been broken in my strategy, then it's a call for caution. It means, right, we need to be sitting on our hands. We need to be careful here because we might be seeing a trend change, a break of structure. But as long as we wick into it, but body close below it, that's fine, that's allowed. So we can then use fib extension targets to get some form of official trustworthy targets. So that's a 1 to 3 immediately, going to even just the minus 27%. Or again, we could obviously extend it, which would make it even better to a 4.2. But initially, that would be a fairly healthy target. And you can see, hopefully now, that would be an optimal setup if we'd, obviously with 1 hour price, if pending entry criteria. But that would be an optimal setup because the 4 hour, we waited to turn bearish here. We've then been patient still, waited for the 4 hour leg to pull back. It won't all the time, and unfortunately, you've got to let that go. Not everything is tradable at every given point. But we're then being patient, waiting for that lower high region to be hopefully worked into. and then respected through entry criteria, which is another video for a different day. And then hopefully we're looking then to execute shorts from that highly probable, highly confluenced, lower high area of interest on, because we're bearish on all the higher time frames, the 4 hour, the daily and the weekly. And guys, by the way, if you want any other further help on this, just click the link below and book a call in with me, and you can come on board one-to-one mentorship, okay, where we do lots of stress testing with you, technical wise, psychology wise. We go through all aspects in personal life as well, okay, in terms of building that bulletproof personality. But anyway, I digress. So this would be an optimal trade in an ideal world, because everything's in sync, okay? In an ideal world, we'll see what happens here, but an optimal trade, we'll see. So we come into that price in that area of interest, we hold, we're still holding. Let's see how we play out. So obviously went into a little bit of drawdown. At this point here, we would definitely be running risk-free, okay? Because we've done over 30-40% of the move. And let's see, do we end up getting into targets? Yes, we do. We wick into it in the end. Nearly got taken out of break even there, but as you can see, didn't quite come high enough, which is good. Obviously, lots of people might go break even at this point here, which is far too premature. But no, good. So you can see, and like I said, this is fresh data. Not pre-done this. This is as it comes, as you saw. I was picking a random date, and as you can see, if you can get everything in sync, more likely than not, the trade should play in your favor. Not all of the time, obviously, we all have losses, but if you can get all of that in sync, you're doing yourself a huge favor. Now, if this trade had gone against me, that would have been really, really easy to deal with, because I did everything right in the lead up to it. I was patient, sat on my hands, didn't force anything. And then the trade has obviously played out. But sometimes you'll do it, well, I say sometimes, every time you should do everything right, and the same set of rules, the same synchronicity, the same checks, the same aiming for the same areas of interest in terms of those probable lower high regions when we're bearish, those probable higher low regions when we're bullish. And obviously sometimes you'll still get stopped and it'll be a loser. But with the way my strategy works, if we were to get stopped there, that means we typically would have seen a break of structure and we would have then ended up going higher, which is fine because the trend has changed and you can't predict that. We don't have a crystal ball. So we've got to trade what we see and not what we think. Okay, so guys, I hope that helps. As I said, if you want any further help with this, click the link below and come on board. You really won't regret it. One of my students came on board in January as a break-even trader, and he's just had his first £20,000 month with FTMO and max allocation. So it can just show the power of proper education if you get the right mentor. Unfortunately, this industry is saturated with a huge amount of fakes, so please stay safe out there. But guys, thank you as always for watching, and any further questions, drop a comment or drop me a DM below. Take care, guys.